Hello, my name is Juliette Munro and I'm the Director of Digital Economy at FSD Africa and your host for this session. FSD Africa is a specialist development agency working to build and strengthen financial markets across sub-Saharan Africa, including through supporting inclusive digital transformation. FSD Africa also has an investment arm, FSD Africa Investments, which helps us to achieve our mandate. Our session today focuses on pushing frontiers in digital finance. The impact of digital technology on patterns of production and consumption is emerging as a key driver for the next phase of growth in the global economy, transforming the way we live and work. A recent report by Google and the IFC concludes that the digital economy could add $180 billion to Africa's economy by 2025, equivalent to over 5% of the continent's GDP. A combination of factors are attributed to this growth, including expanding connectivity, urbanisation, growing tech talent, and a vibrant startup ecosystem. Digital finance, including advancements spearheaded in Africa, such as mobile phone payments, is a critical factor in this growth, driving innovation, opening up new markets, and creating new possibilities. In this session, we will explore how digital finance has advanced beyond its early days of facilitating payments alone to contributing to broader and more inclusive and sustainable economic outcomes. We will hear from MFS Africa, a leading African fintech, which has helped transform Africa's remittance space and which is now evolving well beyond offering payment services alone. We'll also hear from 4R Digital, a highly innovative technology platform that is leveraging digital payments to democratise carbon finance by aggregating the supply of small-scale climate-positive actions to meet growing global demand for carbon credits. Through the experiences of these companies, we will appreciate the particular role of early-stage capital in unlocking the kinds of innovations that are needed to drive large-scale and inclusive digitalised economic growth. First up is Dare Okuju, founder and CEO of MFS Africa, a leading African company now with global reach. I last interviewed Dare at AFSIC in 2019, not long after we had made our initial investment in the company as part of its Series B raise. Today, as we work towards our investment exit, we reflect on two key things. Firstly, MFS Africa's story, how this African-led fintech, which started out with a simple mission to enable remittances, has gone on to help transform Africa's payment space and support the digitalisation of many transactions and supply chains in the process. And secondly, how early-stage investment in MFS Africa and the buy-in to its vision has helped the company in this transformation journey. For this interview, I'm handing over to my colleague Anne-Marie, Chief Investment Officer of FSD Africa Investments, who caught up with Dare in his Johannesburg head office.
Thank you very much, Juliette. I'm here in Sandton at number 1 Sandton Drive in the MFS Africa offices. Dare, thank you so much for taking the time to be with us. I know it's been a very busy time for you.
Indeed,
so
my
we're
pleasure.
delighted that you're here. Dare, we invested in MFS Africa in 2018 as part of the Series B, and there we really bought into your vision of interoperability enabling more flows of remittances, which are an important source of revenue for low-income households in Africa. The world of payments has changed. So tell us a little bit more about how you saw the world then and how it has changed fast forward 3 years.
Let me go a little bit back, 2010, when I actually started MFS Africa. Mobile money was really an M-Pesa story in Kenya. And there were different attempts by different mobile networks to replicate the same. But there were also competing stack in terms of store of value and channels to access that store of value. So we know mobile money, the store of value is linked to the mobile, and then the channel is the agent network. But there were prepaid cards and equivalent as well. I think it took probably 5 years for mobile money to really emerge as the dominant form and scheme. And MFS Africa, we have been part of that journey. And our bet or our assumption about the future was indeed that mobile money was not only going to be ubiquitous, but connecting them to each other across different countries, different currencies, will unleash something spectacular about Africans and African businesses. And remittance has been the way to get to that scale for us. And when indeed FSD Africa Investment joined the B round, we were at that point where we have proven that remittance indeed could be made simpler, easier, cheaper between Kenya and Uganda, between Benin and Cote d'Ivoire, between Zambia and Zimbabwe, even between UK and Ghana, or the US and Uganda. But we still had to prove that this platform can be more than a platform for remittances. And I think that has been our biggest achievement in the last 3 years, is we have been able to not only continue making this platform really fitted for remittance business, and in COVID time, it really made a big difference to hundreds of millions of people across the continent and in the diaspora. But we have also now been able to put this at the service of small and medium businesses across sub-Saharan Africa through the Bionic acquisition, which was done last year. We have also been able to enter partnerships that will allow us to go beyond connecting African and African businesses to each other, but connect it to the world. Now we're looking toward China for the growing Africa and China trade. We're looking toward, the global north through our partnership with Visa, which will allow that trade, but also e-commerce, digital goods that we know are on the rise. So overall, I think we are still on that journey to make borders matter less, as we like to say, which really means that if you can make a phone call, we want you to take for granted that you can transact. And we are really, really close to make that happen now through not only the investment that FSD Africa has made, but the new investment that we are getting.
How would you describe your business today? Because you're not only enabling remittances, you're enabling many more things in the digital economy.
If we focus for a moment on rural or kind of agricultural sector, MFA, the starting point has to be the domestic mobile money scheme. So as you know, MFS Africa, we don't provide a mobile money scheme. We make sure that all these schemes can come together in a network of networks. So, but if you are like in Kenya or Uganda now, and you are working with one of our clients, Waneka Fund, who continue to make payment and collection from millions of farmers in the region, what our business has effectively allowed Waneka Fund to do is to connect simply once to MFS Africa and being able to operate in 7 different countries. Before MFS Africa, it would have meant at best for them to engage directly with 3 or 4 different mobile networks in each of these countries to create connection. And each of these connections are not just technical connections. They are also settlement relationships. They are compliance services and processes to be in place, which increase the cost of delivery of the service for everyone. And usually who end up paying for that is the farmer, is the end user. So what our business has been able to do and I'm just using Waneka Fund as one example in the farming community, is to make it extremely simple and therefore extremely cost effective for businesses to travel across markets. That if you're doing something great in Zambia right now and could be replicated across the continent, your connection to MFS Africa is enough to get you to do that in terms of collection and disbursement. The other thing that we have found out, which is quite interesting, is the huge engagement of the youth, right? So what I like to call the average African, which is digitally connected, still a woman, 25-year or less, listen to Rihanna, buy on Amazon,
right.
Probably a Manchester United fan. I see you dress for it.
Yes, of course.
And what we are seeing is some sectors are emerging from this group. Entertainment is one of them. I mean, you just have to go on TikTok to see the talent, the entertainment talent of millions of youth in Africa. We are seeing people performing on YouTube. We are seeing these people setting up businesses. It could be in fashion, in food, but advertising on Instagram, chatting to their customers on WhatsApp, and paying full mobile money. And what we are increasingly positioning ourselves to do, and we have started doing this in East Africa, is to expand the market. So if you make a beautiful dress for someone in Kenya and someone in Cote d'Ivoire wants to buy the same dress, it should be possible. And through MFS Africa, it will be possible to collect from that person the payment. And so, yes, there has been a huge benefit, I would say, to rural areas low-income people through the advance of MFS Africa, because we have helped social enterprises, NGOs, GDOs, government sometimes, but also private sectors to engage cost effectively with that market. But we are also paying a lot of attention to young urban people who are creating other sort of businesses that need support, that also needs to cross borders. And when you need your business to cross borders, it means you should also be able to pay across border or be paid across border.
Dari, as you know, our shareholder is UK Aid from the UK government, and we care very much about supporting livelihoods for vulnerable groups, displaced people. What do you see as the role of digital services in providing a safety net for this group of people?
I would say the first thing is to get African governments to worry about the same thing, right? Because as resourceful as the UK government is, the heart of the issues require political leadership and political actions in Africa, not in London. Having said that, we have to again look a little bit 5-10 years out. Usually, not that we have to sacrifice the present, but some of these solutions will take time to play out. And digital, it is right to bet on digital for the group that you mentioned, not only the displaced group, but also our attention usually is on crisis. People who move now, what's going on in Guinea-Conakry, what will that mean for immigration? What's going on in Mali? What will that mean for immigration? Afghanistan, of course, but what we don't pay enough attention to is those migration forced by economical hardship. And a lot of those migration tend to also be within Africa. So 70% of people who leave a place in Africa end up in another place in Africa, whether it's in their own country or across the border. That means that we have to make it possible for these communities to stay together. Digital tools being phone makes it great to communicate, but how do they transact with each other? And people continue to trade with people they know. So if people move from Guinea-Conakry and go to Cote d'Ivoire, they're going to continue to trade among themselves. How do they make payment between themselves? How do we change that? Now, for us, one of the obvious things is if we are building roads and rails to connect countries and cities in Africa, if we have telecommunication networks to connect countries and cities in Africa, why don't we have payment highways to connect people in Africa? And a lot of that is actually now at the door of regulators.
Yes.
The technical work has been done. I mean, we have proven it, and many other people could do this as well in terms of, maybe not at the same scale, but you could take Congo Brazzaville and DRC. Brazzaville and Kinshasa are the two closest capitals in the world. It's just a bridge, yet you can't send money using a phone across the two. Doesn't make sense. How do we get the political will to change that? And the good thing about it is not just going to help displace people. It will help people not to displace themselves. Because if I can get access to the full opportunity of the world while being in Kinshasa, why do I want to move to Brazzaville? Or why do I want to move to Johannesburg? So for me, the main way, the biggest help will be really to raise the attention and the urgency of this through different forums. The Continental Free Trade Secretariat could be one, the African Union, I guess. But it could also be regional, because we also know that the economical clusters tend to be regional.
Right.
Around Cote d'Ivoire, there is a fantastic cluster, in West Africa. We know there is a big one with Nigeria. Cameroon and Nigeria alone, $2.5 billion a year in the formal market. That is in the top 20 busiest corridors in the world. So there could be some regional intervention, but at the end of the day, people have to recognize that this is as important as building roads, as building railroads, as connecting, convening big gatherings. We have to make it possible. If you are in Lomé, it should be possible to transact with someone in Accra, the same way you can transact with someone in Cotonou today. Take Liberia. We know the tragedy of Liberia, where the country is coming from. But the energy is there. That young average person that I described earlier is also in Monrovia. Now imagine that person come up with a digital service that is of huge appeal. How easy it is for this person to roll it out across Africa. Same person or someone else finding the same idea in China, in India, in the US, the market is so much bigger. But if you do that in Liberia today, you have 5 million people
Right.
at best to
Yes.
sell to.
Yeah.
How do we make it 1 billion people? You know? And I know it's a lot of, I mean, there is, this is part of, I believe, what the African, the Continental Free Trade Agreement is about. But there need to be urgency about digital because that's easier. You know, there's a lot of thinking around, movement of goods, which are harder. They require investment and infrastructure that takes years to build. But the digital network is already there and is continental and is Pan-African. It's about decision to allow this person in Liberia now to simply collect money from someone in Zambia who wants the service. And the irony is if the same service was actually provided by Google, it will be easier for the person in Zambia to buy it.
Right.
But it's not possible for the person in Zambia to buy from someone in Liberia because we haven't made a decision. I'm not talking about billions of dollars in investment. I'm talking about decision. So if we have the political attention of someone like the government of the UK, the best place is to raise the awareness, to elevate this subject that simply require decisions by our leaders to merge markets.
So you spoke about the entrepreneur in Liberia who has this great idea and it has a very small market. You spent 10 years yourself trying to build up MFS Africa, and I'm sure it was a challenge at the very beginning to get that early investment. So what do you say is a problem there in terms of these companies accessing capital?
I think you have to go to basics. What do you need to move from an idea to a business? You need resources, and it's people and money, basically, in that order. So access to good people at every stage of your evolution, and access to capital, not only to pay for the people, but also to expand your company. We have to recognize that the tech ecosystem in Africa is quite young. I belong to generation 2 or 3, depend whether we count the mobile networks in there or not. And it might take generation 5 to get to something really smooth, right? So it will still be bumpy in the years to come. But I think we need, on both fronts in the resources, we need to stay at it so there will be more people with experience for startup. I always tell the story of, how do you find a chief commercial officer that can take you from $100,000 in revenue to $10 million in revenue. If you're in the US, they're like, 100 people who have done this 10 times, and you can, well, if you're in Africa, depending on where you are on the timeline, there were not many people, but we are getting more and more of those people because there have been more companies like MFS Africa and others whose alumni are going and doing other stuff. So we will solve the talent problem. And, thanks to COVID, again, talent become a bit more global. Africa is also on the rise in terms of attractiveness for talent. So I think the talent thing will be solved. The capital thing is still very difficult, I have to say. And there are many, many, opinions about this, but my own, the one I believe strongly is that Africa need to invest more into Africa. I think, good investment requires context. It requires,
understanding our markets.
Yeah. And it requires courage. And the less you have of the two others, the more you need of the third one.
Yeah.
Right. So it's really kind of act of faith. And Africans, if you live in Kampala, you just have so much more context than someone who's going to fly from US or Europe or China to come and invest in a company in Kampala. So why aren't we seeing more people in Kampala
More African
investing?
investors.
Why aren't we seeing more people in Benin investing? Why aren't we? So I think that, yes, there is a lot of row about, who get funded in Africa, which tend to be, white males most of the time. It's true, it's the fact, you look at it. But how do we change that? We have to remember money flows over a relationship. And so Africans, we need to invest more. That's what MFS Africa is trying to do as a company through our Frontiers, MFS Africa Frontiers vehicle, because we have so much more of that context and that culture. We understand more. The asymmetry is smaller for us. And that's also what I do every now and then as angel investor in my own capacity. And I think that we have to do more of that. It doesn't mean we have to accept the bias around investment coming from outside of Africa, it's completely unacceptable. We have to fight that, and we have to be loud about it. But we cannot be silent on the fact that there's just not enough African companies investing in Africa.
It's been a long journey for you, Dari. Looking forward, what do you see as the future for the company, but for the digital economy on the continent?
The future is actually bright, and it may not feel that way, being in Johannesburg at the end of level 3, all the travel restrictions. But the more line of code has been written, the more ground we have to build things on top of it. I get really excited by sectors like education, health, agriculture, where I think in the next 5 to 10 years, we will see a whole lot more activity and large company coming out of in a digital manner. So I would still bet on tech in Africa for the next 10 years.
I would bet too. Dari, thank you very much for your time this morning. We really do appreciate it. Juliet, back to you. It's been a fascinating morning here in Johannesburg with Dari Okuju, the founder and CEO of MFS Africa. Really inspiring to see and Beninois take MFS Africa to the world. Thank you.
Thanks, Anne-Marie, and particularly Dare for his perspectives on how the world of digital payments has advanced and is opening up new financing and market possibilities. Our next guest, Nick Hughes, has been at the forefront of innovation in Africa's digital finance space for decades. As co-founder of Vodafone's mobile money platform M-Pesa in the 2000s, he helped bring financial services within reach of millions of Africans for the first time. In 2012, he went on to co-found M-Copa, which provides pay-as-you-go services, including solar energy, to off-grid customers. His latest project, 4R Digital, with the help of early-stage funding from FSD Africa, deploys digital finance to incentivise and reward small-scale green projects by linking them up with the burgeoning voluntary market for carbon credits. Welcome, Nick. You've been at the forefront of the mobile payments revolution in Africa and the emergence of the Internet of Things. What have been the biggest challenges you've faced in getting these projects financed and off the ground?
The start is always the hardest bit. Today it's easy to look around the world and see, I think GSMA now counts 1.2 billion digital wallets. But 17, 18 years ago, when we were just getting into the concept of what a wallet is, nobody would have thought it was that big. In fact, 8 out of 10 people you spoke to about digital finance wouldn't have a clue what it was. And so getting started with an idea is always a challenge. And rarely do these things happen as like epiphany moments. You have to sort of work at them. And for me, the first thing is to stay absolutely fixated on a customer problem. What's a real need out there in the real world that we can solve with technology, and not get too drawn into technology. So being fixated about solving problems is important. Of course, patient capital comes in, and you will know this, of course, from FSD and M-Pesa started because DFID, FCDO today, gave me a grant that allowed us to experiment for a couple of years. So having patient capital available to do some of that experimentation is a really important factor. And then the third one I'd pick, you've got to get very bright, good problem solvers around you. And I've had the privilege of working with some fantastic teams over the years. And at the start, you've got to have people around you that are not going to be defeated by an obstacle or a problem. And then over time, of course, you bring in the sort of builders as opposed to the rule breakers, and then you can grow and scale from there. But yeah, those three things for me: stay focused on the need, find patient capital, and put creative teams together.
Thanks, Nick. We're going to come back to your point about staying focused on real need shortly. But can you first tell us a little bit more about 4R Digital and the CAVEX platform that you're in the process of developing, and particularly how the business model builds on the advancements in digital finance that you've very much been part of?
4R Digital is a new company I incorporated with some colleagues last year. 4R is a reference to the fourth industrial revolution, which, if you're a follower of that and the digital economy, it's here, and we're living in the fourth industrial revolution. And so that's a little bit of a sort of reference to what's going on around us. And, we've set 4RD up because we're passionate about the opportunities we can see linking digital finance with digital connectivity. And in fact, that leads into what CAVEX is. CAVEX stands for Carbon Value Exchange, and it's an early stage venture that we're starting with FSD support, which is playing into the opportunity that is emerging around the voluntary carbon markets. And this is all about accessing climate finance. So first, a very little bit of context before I share a slide which will show what CAVEX does. The context is set by the obvious need now to almost every government around the world that we need to do things to address climate change. And the UK government is hosting COP26 next month, where governments are all coming together and private sector, and they're talking about things we can do both in law but also through voluntary action to tackle the emission of greenhouse gases. Sounds quite complex, but a part of that solution, the primary objective is to reduce emissions at source. That's very clear. But a part of the solution can be to use, if I'm an organization that makes a commitment to net zero, so I'm going to remove all of the emissions that are associated with my business, and I can't do it by reducing emissions at source, I can potentially buy some credits from somebody else. So from an organization that has had an approved reduction in carbon emissions, they can sell those emissions to me and I can count them in against my target. And carbon markets have actually been around quite a long time, but they've not been very efficient. In fact, they just simply don't work because nobody has confidence in the source of that carbon credit. How do I know that reduction's actually been made? There's been very little price visibility on the markets for a ton of carbon CO2 credits or the equivalent. And these sort of problems have dogged the adoption of these markets. They've made it that it's full of friction. It's very expensive to get the verification done. And that's sort of excluded many organizations, especially smaller projects in emerging economies. It's that those overhead costs of getting involved in that space have been too big and too heavy. And that's where CAVEX comes in, because we've actually got three things we can do now to address this problem. First of all, we can monitor tiny levels of activity remotely using digital connectivity. That's a big change. We've got IoT, Internet of Things, we've got machine to machine, we've got the sort of things that we were doing at MCOPA, where I'm monitoring a solar energy a piece of equipment. I know how long it's on for, I know how long it's not working for, I can calculate the impact of that particular piece of equipment against carbon emissions. And so first of all, that's a really important thing. Because of the global connectivity we've now got and different ways of doing it, everything from satellite through to sort of narrowband connectivity, we can monitor things at very small, very accurate levels. The second thing, of course, is these commitments that we're now seeing being made by most large organizations. In fact, most of the FTSE 100 here in the UK, almost all of those organizations have now made commitments to climate reduction. Microsoft is a great example. They've actually said, we will be net zero by 2030. Net zero means they've got to go out and find around 16 million tons of credits because they want to account for every ton ever emitted since the creation of Microsoft. Now that's an extreme example, but many large organizations are now committing to net zero by 2030 or 2040 or 2050. So you've got a real buy-side commitment for credits. And then, of course, digital finance. We now know we can move a little bit of money around across the globe at a very low cost. And that means, from CAVEX perspective, we can now start to incentivize the clean activity that we can monitor in great detail remotely. There's a slide on screen which illustrates this two-sided market. It's a little complex, but you have projects on the left-hand side which are bringing data into a platform. That data demonstrates and can be verified that clean activity has happened. And then on the buy side, the right-hand side of this market, we've got corporates wanting to find good quality carbon reductions and credits, which they can then transfer funds for. And you'll see the funds transferring, from buyers to sellers. And that's really what CAVEX is all about. We think we can find a way to democratise some of that access to climate finance, allow most of those funds to flow all the way back to the projects. And we can do that because we now know how to move, small amounts of money around at a very low cost. So for me, it's a perfect example of what we can do with digital finance.
Picking up on that all-important word, democratisation, what does your digitalised climate finance marketplace mean for the inclusion of Africa's largely informal and underserved households and small businesses?
Yeah, well, the purpose of CAVEX is to try and reduce some of the barriers to accessing that climate finance. And we took MCOPA through what was called the gold standard verification process, but it cost quite a lot of money and it took about 2 years. And actually, I think we can change that. We'll find a way to allow smaller projects to access that climate by using digital technology. So by allowing that remote monitoring and verification of activity, and in response to that, sending in relatively small incentive payments all the way back to the project participants, and take less out in the middle. So that's the first thing. I think CAVEX can reduce the overhead costs of going through that verification process. And by taking out some of those overhead costs, I think we can move more money back to projects. And it might be a relatively small amount of money from a Western perspective, from a Microsoft who's buying a credit at $10 for every ton. $10 to Microsoft to count that in against their target is something that they've demonstrated that they're willing to pay. $10, if most of that finds its way back to a household in sub-Saharan Africa that's using solar energy instead of burning kerosene, that $10 is real money. And so I think this is the opportunity I think we have in front of us. We can actually take some of that climate finance and move it back to organizations, entities, communities on the ground in sub-Saharan Africa where that's real money, and it might not make or break a business in its own right, but it can be a relatively high margin contribution into household disposable income, or a small business, can be additional revenue into a small business. So, and I think that's the opportunity that we're working on. It's still early days for this type of system, but it actually incorporates a lot of what we know we can do today using digital technology.
You talked earlier in our conversation about the 4R digital solution going beyond Africa. Can you just say a bit more on the extent to which your solution is Africa-specific versus being able to work in other parts of the world, including in more developed countries?
Yeah, well, Africa was the sort of birthplace of digital wallets, actually. As you know, M-Pesa kicked off in Kenya in 2007. And so in many ways that digital infrastructure is there and it's in use, and we can make payments into the many millions of digital wallets that now exist in Africa. But that's it's no longer just an African situation. I think that platforms like CAVEX can work globally. So almost anywhere around the world now you can find a digital wallet. Almost anywhere you're under some form of connectivity, whether it's through satellite connectivity or the GSM networks. And so I think if we're smart about the way we can build this, it can work in anywhere in the world. And it isn't exclusively an African thing. I think the need is acutest. Back again to the importance of staying focused on need. If we can find ways to incentivize clean development going forward in, for me, sub-Saharan Africa is a place that we've all lived and worked in for many years. But if we can find ways to incentivize clean projects there, for me, I think that's a very positive thing that we can do in the near term. But it's a global challenge, and we can build technology that works at a global scale.
Building on that point, Nick, and thinking a bit more broadly, how do you see the climate finance sector developing in the future? And what's your advice to investors looking at this area?
I know we've all been excited about fintech for the last decade or so, but I think we've got climate tech already happening. It is a sector. We're starting to see investors start to pay attention to this space. And in fact, if we just look at the voluntary markets that we've been discussing with respect to CAVEX, that's likely to, in 2021, it's likely to be $1 billion business, where it's gone from a sort of a known concept, but it's actually evolved into a very live marketplace today, and it's grown in the last 12 months. It's grown at least 25%, and there are some sort of observers of these trends that are predicting that it will probably grow 15 times the market today, 15 times by 2030. And so these are real opportunities for investors, I believe. And but the same things would apply to any investment. Really, are the investees really focused on the problem at source? That's obviously important. I think investors have to be quite patient in this space, in the same way, we know it's hard to get to scale in some of the fintech applications we've seen. So there's also going to be some patience required, and with investment horizons that are appropriate to the risks here and the time it will take for these markets to improve. But again, there are some very bright people working in this space that come back to the teams. Investors, I'm sure, will be looking for teams that know how to take opportunities to scale, and so those rules apply. But it's definitely a sector which is here, and it's growing, and it's moving fast. It's an exciting space, I think, from an investor's perspective.
Linking back to digital finance, as we've heard, you've pioneered mobile money, pay-as-you-go lighting, and now you're hoping to transform the voluntary carbon market. Looking ahead, are there any other areas where you think digital finance could have a similarly transformative effect?
I do think digital finance has a way to change many aspects of the real economy in a way that I think we're only just starting to figure out. Now, of course, the growth of mobile money is one element. And I think the space we're working in with projects like CAVEX is an exciting space. But there are many more, and I think we're seeing a trend towards what some people are referring to as embedded finance, where we're moving beyond the sort of traditional savings and credits and insurance type products, and we're starting to see how we can embed digital finance down into value chains. And a little bit like the CAVEX model we're looking at, we're addressing a particular area. We're looking to embed technology and incentive payments into value chains. I think we're going to see more and more opportunities like that. At 4R Digital, we're doing a little bit of work in the micro retailer space, and for me, that's a huge opportunity. I think we'll see the growth of tailored digital financial services for particular customer segments and groups. And for me, the informal retail opportunity in sub-Saharan Africa is huge. It's a multi-billion-dollar business, and it's a world which has stayed informal for lots of reasons, but I think there's an opportunity to bring digital finance into the micro retailer sector, and we're doing a little bit of work on that. And that's a good example of another opportunity where we can bring the benefits of digital technology matched against a particular need of the end customer. So I am an optimist. As I look forward, you can see many more opportunities for digital finance beyond where we've come from, and where we've sort of based it on sort of fiat currencies. I think there's lots of opportunities as we look forward.
So lastly, Nick, just thinking about the broader ecosystem, what would you say the particular challenges are for African tech startups? And how do you think governments and DFIs can create an environment that fosters digital innovation?
Yeah, there's always two lenses of looking at the landscape, aren't there? Of course, there's complexities and challenges, not just in sub-Saharan Africa, but all over the world. But if you look at those challenges through a different lens, I think there are opportunities. And back again to what we can do with digital finance. I think we really genuinely are only just starting to understand what it means to move tiny bits of electronic value around remotely and link it to activity. So it's an exciting space, but yeah, for sure, lots of friction points along the way. And perhaps if I were to put a list together, perhaps the first one, certainly from a business management perspective, but also from an investor perspective, is we need some consistency, in the rules from regulators, on how to allow participants to engage on a level playing field, and keep those rules consistent, because there may be challenges, but if we've got surety of the rules of the game, then I think the private sector can move in and apply resources and time and focus to solve problems. So consistency of rules is, and you'll hear that from almost any business person or any investor. If we've got consistency, we can start to move forward. So that's important. I do think organisations like FSD can continue to push at how do we get the front end, the sort of high risk ventures supported. And of course, grants have played a role, as we talked about with M-Pesa. And I think there's other perhaps more sophisticated instruments we could use at the front end of funding some of these initiatives. For example, convertible loans or convertible notes, grants which maybe have a repayment element to them. And so continuing to be creative on the way we can build financial instruments for organizations that are getting involved in some of these early stage ideas. That's also key. And it does, back again to the time it takes, it does take much more time than we think. We actually, with some FCDO support, we've been doing a little bit of work at London Business School on looking at how fintechs have scaled. And first of all, you've got to be sure on what you're measuring when you're looking at scale. But the bottom line is we only think about 5% of the plus 700 fintechs in sub-Saharan Africa today. Only about 5% of those have reached scale when you apply it. When you look at the data and you look very hard at what it means to reach scale. And so that tells you what the challenge is. It's actually really hard to scale properly, and cash is still king. Unfortunately, I think we've got a long way to go before we see cash coming out of the system. And digital finance brings a lot of potential opportunity, but you still need to turn e-money into real money at some point. And I think a lot of what we sometimes get too excited by the technology, and we think we can build these beautiful platforms where everything exists in electronic form, but actually in many parts of the globe that cash is still very important, and we need to think about interfaces between cash and e-money. But nonetheless, the rate of change is high, and progress is evident. And if we look at those trajectories, I think it's a really exciting opportunity in front of us.
Nick, thanks a lot for meeting with me today and for sharing your great insights on what you're working on and how it's contributing to the important issue of climate mitigation. We wish you all the very best in your new venture, and we're very happy to be part of this as FSD Africa. As you mentioned, you're at AFSIC demonstrating your model, so if anyone's interested in chatting to Nick and seeing that demo, then please head to the FSD Africa stand. Thank you very much.
Pleasure. Thank you.
So through our conversations with Dare at MFS Africa and Nick at 4R Digital, we can really see how digital finance in Africa is continuing to advance. By linking to broader digital connectivity, digital finance is helping to transform the emergence of new opportunities, new solutions and new markets for Africa, and underpin a new wave of digitalised economic growth. I think through these examples, we can also appreciate the importance of early stage capital in unlocking the kind of innovation needed for more inclusive growth, which is something that we at FSD Africa are particularly passionate about. So we'd welcome your engagement if this is also an area of interest for you. So please feel free to get in touch with either me or another member of our team. Otherwise, we hope you've enjoyed this session, and we thank you very much for taking the time to watch. So thank you and goodbye.